Hello and welcome back to another edition of the Educated Crypto Trader. Now, before we get into the chart today, if you find value in what I have produced and put onto YouTube for you, please subscribe, give me a thumbs up and give me a comment. It all helps. Okay, let's dive into the chart. It is BTC USD, Bitcoin versus the US dollar. What I wanted to do today was to take you back to 2014, which is where we really started to have our ramp up and our push up to where we are today. Now, as you can see, using the Elliott wave, I've come from this point down here in 214, takes us up to where a 20 grand top was in 217, beginning of 218. And then obviously we then had our bear market, which would have been an ABC market. As you can clearly see here, I've also marked the intermediate leg up, which was also a 1, 2, 3, 4 and 5. So what we have is our primary from 214 gives us a 1, 2 as the pullback, 3 as the primary push, which is where we are currently, sitting at around about 59 to 60,000 currently. Now, to mark Elliott wave correctly, Elliott wave states that because you've got a 1, 2 here, you generally get a 1, 2, which is the third wave up, which is now showing you the degree of trend, which we've marked out here. 1, 2, 3, 4 and 5. Now, you can't see it quite clear enough on here at present because I've got it on a 2-monthly chart, as you can see at the top here. But as we start dropping down, let's go down to a monthly chart and we'll start to bring it in. Again, there's a lot of information on here, so to try and get it all on is extremely difficult. You can see here where our 1 is, our first leg up. Again, this is our 20,000 top, which we achieved in 217, beginning of 218, which then we went into our bear market. We had our bottom then down at wave 2, which would have been an A, B, C correction. But then we start a 1, 2, 3, 4, 5, again, just going over it very briefly once more, on our intermediate wave, which is the subwaves of wave 3 on the primary trend. So let's push in a bit deeper because we're on a weekly time scale here, and we'll go to a 2-day. So bringing that back in, we can see that this is our intermediate wave 3, 4 and 5, and our primary wave 3, which means we should be overall bullish, which will give us a wave 4 and then a wave 5 extension on top of the wave 3. Now let's drive in a little bit deeper into the chart. We're on a 2-day chart. Let's drop down to a daily and open it up slightly. Now I have put some markings on here, some waves and bits and pieces, so you can see where we are currently. So we've reached the intermediate wave 5 here and the primary wave 3, again just reiterating what we have. Then we've had a pullback, push up, pull back, and now we're sitting at around about the $60,000 mark, $59,000-$60,000 mark. Our all-time high sits up here at 61,600-800 thereabouts. Now, if this is the case, what should be requested and required at this particular point after this 5 wave up on the intermediate? We should have a correction. Now, the correction that I've been stating over the last few videos is an expanded flat. So we're just going to go into a little bit deeper, okay? And I'm going to drop down to an 8-hour chart, okay? Now, this is what I see. Let's just get the tool here. Now I see from the top here of wave 5, 1, 2, 3 waves down, which would be the first start leg, should I say, of our expanded flat. Now bear with me and keep up with me with what I'm trying to show you. Then we come from the bottom to the next wave, which is 1, 2, 3, which is our extension in the expanded flat. If it was a normal flat, it would stop at around about the beginning of wave A. So we've got wave A, wave B, and we have a required wave C to come. Now, Bitcoin has been on a very strong trend, a very strong push over the last couple of months, certainly since Christmas. So this could be skewed, this expanded flat, and it could stop at around about this level here, at around about the $43,000 to $45,000 mark. But I feel that it's going a little lower, providing it doesn't violate the top here at our all-time high at 61,800. If it does, that'll be a completely new scenario. But what we have at present then, moving further into the chart, I'm just going to drop down to a 4-hour. What we have then from our all-time high, again, is our correction, which is required after a 5 wave up. So what we have is a 1, 2, 3, 4, 5 on the red waves down. On the blue wave up, we have an A, B, C, which is a 1, 2, 3, which brings up on our next leg. So we have a 5, a 3, and now we should subsequently have the 5 leg down. 1, 2, 3, 4, 5 in white. So technically we have completed a pullback from our all-time high. However, looking at the bigger picture and just coming back out again, we can still see that we only have 3, 3, and we still subsequently need the 5 wave down. Hence the reason why I feel that we are bearish, although overall on Bitcoin we still remain bullish. A bit confusing, I know, just bear with me. So Elliott Wave states that after this correction, if we go into what he calls a double or triple 3, and we'll say that this is going to be a double 3, we've got the waves down, which is 1, 2, 3 waves down. We then have an any 3 wave. Doesn't matter what it is, it's just any 3. So what we have in the green here is our A, B, C, which is a 1, 2, 3 going higher. Now we haven't violated, again, coming back to it, the 61,800 mark, which is our all-time high. I anticipate from this point here that we should start to decline, which would give us another set of waves down, which might be a 3, 3, 5. It might be a 5, 3, 5. At the moment, we don't know. I don't have a crystal ball. No one knows. But we can only hypothesize and see what direction is most likely and most probable. And at present, most probable for me is the scenario of it coming down. So what will it look like? Well, if we come back out again, back to the 8-hour time frame, and we come back over, and we can still see, like we've got from wave 5 here on the intermediate, 1, 2, 3, 1, 2, 3, we're looking at a 5 wave down. So let's plot that, shall we? Let's go over and grab our tool, and we plot it from the top here, and we go 1, 2, wave 3 usually extends about 161.8 from wave 1, so we're going to put that there, pull it back into this here, which is what it's more than likely will do on wave 4, and then it'll drop once again, usually roughly about the same length. Let's just change the color on this to red. Usually about the same length as its first wave down. That would put us down here at around 34,000, which is a lot further than I think that it's going to go. And I certainly think we're going to hit the 45,000 pound mark, dollar mark, should I say. There is a lot more I could dive into, a lot more. But to put it all in one video would make this video 30-40 minutes long, and I think that would be too much for anybody to digest at one particular time. So we're going to leave that there at this point. I hope you had some good information. I hope the content for you was extremely good and gives you a lot of understanding as to where I believe we're going to go. But most importantly, makes you think about what you can see in the charts yourself before you make your own informed decision of where you wish to get in or out of the market. As always, I'll leave this here. Thank you for watching. Please subscribe, give me a thumbs up, give me a comment. I'd love to hear from you. Until next time, bye for now.